Hey guys, how's it going? I'm Lewis Harding Investor and welcome back to the channel. And in today's video, I'm going to be analysing Rio Tinto stock. I'm going to be using fundamental analysis to see if this company is worth buying or not. I'll be then using a DCF valuation to determine the fair value of their stock. Let's get straight into it. So who are Rio Tinto? So Rio Tinto Group is an Anglo-Australian multinational and the world's second largest metals and mining corporation behind BHP. The company produces iron ore, copper, diamonds, gold and uranium. The company was founded way back in 1873 when a consortium of investors purchased a mine complex on the Rio Tinto in Uvela. I probably butchered that name massively, but fun fact, that's where the name came from, a mine in Spain somewhere. But yeah, anyway, they produce all of these different commodities. The company itself is dual listed, both on the London Stock Exchange, where it's a constituent of the FTSE 100 index, one of the biggest on there, and it's also listed in Australia as well, and it's part of their main index. And you can buy ADRs in America as well. All of them ticker symbol RIO, easy enough. Now let's take a look at the sales for Rio Tinto, and starting with the sales per business. And as you can see from the 2021 sales, 62% comes from iron ore. So yeah, this business is predominantly iron ore based. Next on the list is aluminium, 20%, copper 12%, other minerals 10%, and other is like measly 0.4%. But yeah, pretty much then iron ore makes up most of their sales. Hence, the iron ore price is going to have a big effect on this company. Sales per region, so the majority of sales come from China with 57%, the United States of America 13%, Asia 9%. I'm not going to read the others out because they don't make up a meaningful impact, but the rest of the world makes up the rest of them. But yeah, predominantly China, predominantly iron ore as well. Now let's take a look at the free cash flow for Rio Tinto, and this extract has come from Yahoo Finance, and the currency is in USD. So from 2018 to 2021, the free cash flow has increased by a fairly decent amount. Yeah, you can see in 2021, clearly an anomaly here. We've had a blockbuster year. Commodity prices have been roaring, racing high. And yeah, Rio Tinto has had a good year financially. Look at that cash flow. Free cash flow nearly doubled from 2020 and yeah, tripled from 2018. So by no means is this going to be sustainable. You'd expect the commodity prices to come down a bit, settle a bit, and then they'd maybe get to a certain free cash flow, 10 yearly average figure you'd expect. But this has clearly been a blockbuster year, which has been obviously awesome, but you can't expect it going forward. You've got to have realistic expectations. But good nevertheless, especially as they're going to be paying a special dividend soon. Now let's take a look at the key ratios from Morningstar, and yeah, PE ratio of 6, dividend yield of 8.5. To start with, that's pretty solid, isn't it? Yeah, cheap valuation, a high dividend yield. We'll come on to why that is the case in a minute. They've got a price of cash flow of 5, which, interesting. That's not free cash flow, by the way, that's just for probably operating cash flow. But then yeah, let's have a look at the profitability. So operating margin and profit margin. So yeah, 2021, clearly higher than the rest of them. Had a really good year, you would expect this. And also the return on equity has been higher. Yeah, it is a little bit up and down with the profit margin. 2017, 18, 19, it's like up and down like a hill up and down. But luckily the return on equity is staying at a reasonable figure. Apart from 2019, it's above 20, so that's solid. And return on capital employed as well, a bit lower because that includes debt. Very solid for any business really. Above 10 for ROCE is good, so financial health anyway. Gross gearing, there's not much debt in this company, thankfully. Something I love to see. And yeah, very solid amount of debt, manageable. They're probably not going to go bankrupt. They've got a lot of cash going on, so pretty solid. Very high interest cover as well. Current ratio way above 1, so solid across the board really. Now let's take a look at the genuine impact stats for Rio Tinto, and we'll start with the quality metric first, and it is showing very high quality based on the numbers. Profitability, financial strength, capital allocation, sound, strong, very high, awesome stuff. And yeah, valuation is looking cheap based on their rankings. Income statement's looking cheap. Balance sheet's looking medium, and cash flow very cheap, which we obviously love to see. We love free cash flow being cheap. Historical growth, revenue growing high, all of these figures high or very high. Likely this relates to 2020 and 21 being good years for Rio Tinto, so bear that in mind. But yeah, quality wise, it's looking solid. Valuation is looking solid, so it's looking decent across the board here. Now let's take a look at my analysis checklist for Rio Tinto PLC, and yeah, let's get straight into it. So the first pillar, gross profit, net profit margins, absolutely smash out of the park here. 77% and 22% respectively over a 5-year average. Once again, the first 3 pillars haven't been updated for 2021 because Macro Trends hasn't updated their figures yet. So once we do, I'll get them updated and I will do another video for Rio Tinto. But likelihood is they'll all be green anyway. I'll be very surprised if they're not, based on the numbers we've just seen. So not having 2021 here isn't necessarily too bad. You're not really missing too much. It'll be green across the board anyway, if that makes sense. Return on equity, 18%, solid. I love above 15% here. Long-term debt to equity, yeah, there's not much gearing involved in this business, so awesome stuff. Current ratio above 1, lots of liquidity, we love to see it. Proven ability to grow. 2020-21 has been great years for Rio Tinto, so all of his figures are going to be up. It will likely skew it, and we could see some red years in terms of the growth because it'll settle back down to a more realistic figure. But that's understandable if you understand the business. It's not something to worry about at all. It's expected, and you just got to put it into your expectations for free cash flow, for example. Great capital allocation. So Rio Tinto has been repaying the long-term debt, which is decent over a 5-year period. Dividend growth, yes, they've been increasing their dividend. These guys do produce special dividends when they do have blockbuster years, hence 2020 and 21. They're paying special dividends with the lovely amount of free cash flow they've produced, so which is good for us shareholders owning the stock, rewards us for keeping faith in the company. Decreasing share count for slightly decreased shares, not by much. Good acquisitions. Yeah, I'd say they have made good acquisitions. I'd have to look it up a bit more, but I'm guessing all they're doing is acquiring mines, so nothing too fancy. Quality score over 100%. So yeah, I clearly think based on my metrics, it's a good high quality business. Yeah, which is awesome. Then on to the last one, which is valuation, the most important metric. Buy at a fair price. PE ratio, price to free cash flow ratio, 5 and 6 respectively. Very cheap. There's a reason for this, and it's because the market / analysts expect the free cash flow / earnings to go down, normalise a bit, and these two numbers will rise, probably double or something over the next year or two. So it's not quite as cheap as you think it is, basically. It's a bit hidden. But then yeah, looking at the DCF valuation for a 10% return, we're looking at a share price of £51 per share, and it's around that figure at this time of recording. So yeah, if you'd like a 10% return, maybe it's a good time to take a look at Rio Tinto. Now let's take a look at my DCF valuation for Rio Tinto, and yeah, market screener analyst estimates for my top 3 figures in the free cash flow boxes. 10% return, converted from US dollars to British pounds. We're looking at a share price of £49 per share. But then if you were just for net cash, so all the cash minus the debt, share price of £51 per share. Pretty solid. If you're looking for a 10% return, if you can buy below £51 per share and get a little bit of a margin of safety, could be a solid investment, could be a solid stock. I own the company, full disclaimer. It's clear to see there's good financials behind it. Analysts / the market expects free cash flow to decrease over the coming years a bit, settle at a more reasonable figure. I did another video in January on Rio Tinto, and I think I said the share price was worth £65 per share, but that included 2021's free cash flow estimate from analysts, and now that has passed, the free cash flow going into the future is likely to be a bit of a lower figure, hence the lower stock price. But these analyst estimates could be wrong, for example, and if they are higher, then you're looking at a higher share price. But yeah, based on what's happened previously, you want to estimate free cash flow lower to be more conservative, and that protects you as an investor. But yeah, 10% return is looking in that ballpark at the minute. So what are my thoughts on Rio Tinto stock? So yeah, disclaimer once again, I own Rio Tinto. I've owned it for a couple of years now, once again, and yeah, I personally like this company. I think the financials of the company are solid, solid profitability, solid returns on capital, low amount of debt to do all of that, decent amount of growth, good capital allocation in terms of the dividend, paying down debt / not having much debt. I'd like to see some more share buybacks personally, but if they could do that alongside a big dividend, winner for me as an investor. But yeah, the valuation is looking still fairly decent for Rio Tinto. If you can buy it, you know, get a margin of safety on that figure. What was it, £51 per share? Get a margin of safety on that. If you don't have any mining companies in your portfolio, no commodity businesses, it could be a good one. A hedge against inflation as well. If inflation stays high, commodity prices stay high, then Rio Tinto will likely do well over the long term. And yeah, if the company does well, the stock price will likely do well as well if the free cash flow and earnings, follow suit. So yeah, pretty simple business to understand. The mine stuff, ore, aluminium, diamonds, you saw it in my analysis, and they make a profit on it. Pretty simple. Yeah, I know commodity businesses are for everybody, but I'd say it's worth a look into at least. So there we have it. That was my quick stock analysis of Rio Tinto stock. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.